Good morning, everybody, and welcome to our German Select Conference, iteration number 6. We're very excited to have you all aboard this morning, especially this early. We're going to have 11 companies present themselves and their investment cases, and of course, entertain your questions. We will kick it all off with Flughafen Wien, which will be presented by Bernd Maurer, Head of Capital Markets. Each of today's 30-minute slots will be divided into roughly 20 minutes presentation, 10 minutes Q&A, and like always, feel free to post your questions into the chat box on the lower right-hand corner of your screen. We will record this presentation and make it available later on Research Hub. With all this in mind, thank you. Buckle up, we're ready for takeoff, and it's all you, Bernd.
Hello, a very good morning. I'm glad and honored to open the German Select conference representing Vienna Airport. I want to first briefly touch the characteristics of Vienna Airport, continue with our 9-month performance, that you get a grasp of how we did so far in 2025, and want to spend the main time of this slot talking about the investment case, how we see it and want to present it to you, and happy to discuss then any topics of your interest and questions you might have. Looking at Vienna Airport, we last year already topped the pre-COVID passenger level of 2019. So this was 31.7 million last year. This year we are very well on track to reach our guidance of around 32 million. Perhaps it's a notch higher. Important is to point out that when you look at Vienna Airport from an investment perspective, and buying the share or considering the investment, then yes, it's mainly about Vienna Airport, but not only. We also consolidate Malta Airport and Košice Airport in our group. Košice is rather small with less than 1 million passengers, but Malta is sizable, already accounting for some 20% of passengers and 20% of group earnings. Talking to DACH investors, we are a Lufthansa hub like Frankfurt and Zurich. Home carrier Austrian Airlines has approximately 45% market share in Vienna Airport. Important also to point out when talking about business models of airport is our business model being a full service provider, that really all services to secure airport operations are executed by Vienna Airport. Some other airports are outsourcing services like handling or security controls, security checks. This is not the case in Vienna. We are a full service provider offering the whole set of airport operations, including ground handling, the security services, and all the necessary infrastructure for the flight operations, plus all the commercial activities for the real estate management. As I said, after touching the main characteristics from a high-level perspective, I want to continue with our business development in Q1 to 3 2025. In the group, a very robust passenger performance. You see in the group, including Vienna, Malta, and Košice, passenger growth of some 4% in the first 3 quarters. Real uptick in October, plus 6.7%, makes passenger growth of 4.3% between January and October. Looking at the numbers, you see real strong dynamics in Malta with double-digit growth of 11% in Q1 to 3, almost 17% in October. Malta over the last years had a tremendous passenger performance. Passenger numbers more than doubled within the last 11 years now. We are now well on track to surpass 9.5 million passengers this year in Malta. And in 2014, Malta recorded 4.3 million passengers. So here you see the dynamics in more than doubling within a time frame of 11 years. To the main airport in the group, Vienna Airport, solid passenger growth of around 2%, 1.9 exactly in Q1 to 3. We suffered in the summer month a bit from airspace closures in the Middle East triggered by the war between Israel and Iran, and then only the later restarting of the destinations in the region by the main airlines. So you see that in the bullets, you see that in June and July, we had a small decline of passengers, but after airspace was opened again, in August and September, traffic picked up very well. So in Q1 to 3, traffic growth of 1.9%, but as a function of further uptick of traffic in the Middle East in October, very strong offering from the airlines during the autumn holidays in the end of October, and over many different airline groups improved seat load factor. Traffic visibly picked up in October, plus 3.7%, makes it a traffic growth of a bit more than 2% in 2020 versus 2024 so far in the year. We are on track to report passenger-wise a record year this year with our guidance of around 32 million. And in August, August was a record month in the 70-year history of Vienna Airport. We recorded the highest single month passenger volume in August with 3.4 million passengers, and also a new single day record with more than 120,000 passengers on a single day in early August this year. This translates into the following P&L numbers. We had, as a function of the passenger growth I was elaborating about and tariff increases in Vienna, a quite robust top-line growth of 6.7% to almost 850 million euros. We face some cost pressure, especially on the personal cost side, which results in a slightly lower EBITDA and EBIT margin year on year. That's why you see EBITDA and EBIT growing under proportionately versus the top line, but a positive financial result as a consequence of our positive net interest income, as we are net cash positive. I think that's important to point out. We are net cash positive. We have no financial debt. The money is invested in term deposits mainly, and in times where we receive again interest rates, this leads to a positive earnings contribution from the financial result and visibly contributes to the bottom line. Net profit growth was decent of around 4%. That said, I want to, in the next minutes, focus on the investment case of Vienna Airport and walk you through the 6 pillars of the investment case, how we see it. Of course, it's growth. It's a high profitability. Dividend policy, which goes hand in hand with our net cash position. The Vienna destination is an attractive one. We secure our airline customers to keep capacities in Vienna and to enlarge them, hopefully with a high quality we offer, and especially with respect to energy efficiency. Sustainability is an important topic over the whole management, as CO2 as airport operations are already CO2 neutral at Vienna Airport since the year 2023, according to the definition of ACA. Talking about, in my point of view, of course, the most important one is growth. These 2 charts I like very much to explain the structural growth pattern and trend growth of the European aviation industry. On the left-hand side, you see the aggregate of passenger numbers on European airports between the years 2000 and the end of 2024. On the right-hand side, the same for Vienna Airport. It doesn't matter that Vienna Airport showed a bit of a higher growth in the last 20 years, or in the 20 years till COVID and the aggregate of European airports. What I want to outline with these two charts is that you really can see from the chart, and also calculate it when you calculate the trend line from the numbers, how almost linear this structural trend growth of global and respectively European aviation is. So that's point one, and this structural trend growth we also see in the mid and long term. The second thing what I want to point out with these two pictures is that whenever there is any downturn for whatever reason, be it the terror attacks in 2001, which hit global aviation, be it the financial crisis following the bust of Lehman Brothers. Of course, COVID was a different animal, but still you see a very quick recovery back to a trend line or the trend growth rate you can expect. This reasoning is also confirmed by the two main airplane manufacturers, Airbus and Boeing. Both manufacturers have quite a homogeneous forecast for the next 20 years. They talk right about almost doubling of the fleet from currently about 25,000 airplanes in operations to round about 50,000 planes in operations by 2044, including production of 43,000 new ones. Growth is, of course, driven by the dynamics in Asia, respectively China and India, but the global growth, or the other way around, the strong growth in Asia is fueling global growth with this European growth, and the more people, or the more Asian people fly, you see this in statistics, in flights per capita and so on, the more will come to Europe. With that, the more will come to Austria and fly via Vienna Airport. Future growth is very likely not triggered by routes Vienna, Frankfurt, Vienna, Zurich. That's global air traffic, where Vienna is in the center of Europe, and we will capture on the strong global growth. If this will be lower than in the past 20 years, we will see, and likely until the forecasts from IATA and ACI point to lower growth in the next 10 years than we saw in the last 20 years. But the point is, there is still growth, and sizable growth in European air traffic, and with this in European air traffic, in growth for Vienna Airport. All my remarks regarding growth in the last year and for the mid and long term will not hold true for next year, as given the reduction of capacities of low-cost carriers, Vienna Airport will likely see a decline of passenger numbers in 2026 over 2025. What happened in September? Wizz Air and Ryanair announced to cut their capacities. Wizz Air is going to withdraw from its Vienna base. Ryanair is reducing capacities. This altogether accounts for about 2.5 million passengers out of a total of 32 million passengers we expect this year. On the right-hand side of the chart, or of the slide, you see airlines who already announced to newly come to Vienna or to increase certain capacities. Most important, our home carrier Austrian Airlines announced to bring another 2 airplanes to Vienna to compensate for some of the lost capacities from the low-cost carriers. But the point here is that although the right-hand side of the slide is more colorful, it can by far not compensate the lost seat capacity from the capacity reduction of Wizz Air and Ryanair. There is another challenge next year we have to face. That's a tariff reduction. Austrian airports and respectively Vienna airport were quite lucky in the last years, as we were allowed to increase tariffs by the consumer price inflation since 2021. Austria, you might know, is unfortunately a high inflation country at the moment in the European Union. So airport charges increased by more than 20% in the last 5 years. Around almost 10% in 2024, 4.6% in 2025. But as traffic in Vienna topped last year already the pre-COVID level, we fall back to the tariff formula as how tariffs are regulated in Vienna, and applying the formula again. You see it here on the bottom third of the slide. Triggers a tariff decline of 2.1% of landing fees and 4.6% for passenger charges. Facing the cost, facing the capacity reductions of the low-cost carriers plus a hit on the tariff side, we already initiated a cost reduction and efficiency improvement program to cushion the financial effect and the earnings effect as much as possible in 2026. I don't want to stress the word bad luck, but in 2027, the Terminal South extension, which is a main pillar of our non-aviation growth strategy, starts its operation, which will have a visible positive impact on revenues and earnings, but that both negative effects, capacity cuts of low-cost carriers and the tariff reduction we face in a year pre-opening of the South extension. Would the South extension be opened already next year, or the two negatives happen in 2027? The impact would be far less visible, if at all, because with the enlargement of our main terminal, Vienna Airport will increase space for shopping and gastro by 50%. So from currently 20,000 square meters by 10,000 square meters to 30,000 square meters then. And this will bring a visible positive impact on revenues. And as these earnings or these revenues are by assumption of higher than average margin, you also see it or will see it in EBITDA. Second point for non-aviation growth is the so-called airport city, which is progressing very well. It's, I think, the best picture to grasp it is that on the whole site of Vienna Airport work around 23,000 people, but Vienna Airport also employs only 5,000 of them. So there is a high cosmos of logistic companies, office space, there is a health center, a kindergarten, a gym, and so on. And this year, a new hotel will open operations around the year shift. Also, our space hub is growing with certain companies from the Austrian space industry. The supervisory board green-lighted the expansion of the Office Park 4, which will construction will start next year and will be opened in 2028. And the big project, potential project, is the development zone west, where about almost 50 hectares of logistics space could be started to be developed in 2026 or 27. Important to point out is also that we, Vienna Airport, own all the land and buildings. We are not a license taker. We do not have to pay any license fees. There is no concession which runs out at any certain point of time, which has to be renewed. It's all ours, simply what we need for the operations of the flight operations and all the land and buildings for aviation and for commercial purposes. I mentioned that we are net cash positive. Here you see the development of the net debt, respectively net cash position over the last years. And this gives us, of course, financial leeway for investments and attractive dividends. You might ask why an airport operator hoards cash. Till last week, we announced not to build the third runway in Vienna. This was the main reason, I would say, why this net cash position in the last years built up, of course, triggered by a very good operating development and cash flow development, but we did not go for more investments in the last years as we awaited the decision on the third runway, which of course would cost a lot of money. And last week we announced not to build it. As I said, Vienna is an attractive destination. You very likely know the city, an attractive tourist destination, attractive conference city, a lot of international organizations and headquarters in Vienna. And this brings, of course, traffic to the airport. And I want to close pre-opening the Q&A with our catchment area, which is important to line out as, of course, we cover large parts of Austria, respectively the eastern part of Austria, but our catchment region ranges far into Central and Eastern Europe, capturing the south of the Czech Republic and western parts of Slovakia and Hungary. Yeah, with those slides and characteristics, I talked about the main characteristics of Vienna Airport, the recent trends, and the main pillars of the investment case, how we see it, and I'm happy now to dive more deeply in certain aspects.
Thank you so much, Ben. We do have a couple of questions already. Starting out with your CapEx plans, and you've alluded to Terminal 3, to Airport City, and you also mentioned that the third runway is not going to be built. And I think you also mentioned a 60% payout ratio. You have a lot of cash on the balance sheet. What are your capital asset allocation plans?
Not announced yet. Of course, that's the main point. What is about what will be our future capital allocation, as that it's not our target capital structure to be net cash positive, but of course it is now very helpful for future investments and payouts. And I think those two pillars will also then drive the capital allocation. But we just last Tuesday, exactly 1 week ago, we ad hoc announced not to build the third runway. So this project was running on till a week ago, and capital allocation will follow. After the Terminal 3000 expansion, there are further investment projects at the airport in Vienna, but this I can tell you as far as we can judge it now and see it also not fully eating up the net cash position, especially when you think of a quite decent cash flow generation we have. So likely more on this within the next at the next occasions, full year results, and then earnings calls next week to more elaborate next year to more elaborate on plans for capital allocation.
Great, thank you so much. Quick question on your shareholders. Obviously, the limited free float is always something that is holding back.
Yes, very important point.
A little bit. Can you maybe elaborate a little bit on the shareholder structure? And thanks for showing the slide here.
Yes.
What their plans are, i.e. if there's maybe any chance of increasing the free float going forward, anything along those lines.
Yeah, first about the history, how it came to this shareholder structure, that our free float at the moment is just 6%. Vienna Airport IPO'd in 1992 with 50%, so to say, in fixed hands, City of Vienna, Province of Lower Austria, and the Employee Foundation. The other 50%, the left-hand side of the chart, have been always in free float. From time to time, one investor held 10% or a bit more, but it was classic free float. But since 2014, an Australian infrastructure fund, IFM, built via 3 mandatory offers, built up a stake of now 44%, having held 40% in 2022. They launched the offer for the remaining free float of 10%. The offer was then running in early 2023, and IFM received, so to say, only 3.3% of the back then outstanding 10% free float. We cannot comment on the likelihood of any changes. That's pure topic to IFM to stay with the current shareholding, to go for more, or to reduce. That's absolutely not in our hands.
I do understand that. One last question, and you've talked about efficiency programs and cost reduction. Now, personnel up 9% year to date. That's quite a hefty bounce that we've seen.
Yeah.
Can you be a little more specific of how you would expect that to develop, and if there were any certain themes that drove this? Tariffs, personnel tariffs, not...
There is, of course, given the traffic growth in the last years, there was also an increase of headcount, but the main driver were high wage increases. Yeah, that's a problem the whole country of Austria is facing at the very moment, but we are solving it as well. As in politics, I would say all sides, left and right, got it. What's the problem when you see current wage negotiations? Usually, and that's in general not bad, Austrian wages follow the inflation of the last 12 months, yeah, with a bit of a productivity component on top. So in normal years, when inflation is 2%, a typical Austrian wage increase would be 2.2%, 2.3%. All fine with this, with this formula. We had a good economic development in the last decades. But following high energy prices, different topic, but Austria very dependent on Russian gas and oil, or has been a strong uptick of energy prices, triggered a strong increase of inflation. And then we had second and third round effects, which via wage increases following the high inflation, which then made inflation very sticky in Austria. And this caused the high uptick of wages, as we had wage increases in 1 year of almost 10%, last year 7%, this year also some 3-4%. And this you see now in the P&L. Certain fields of the Austrian economy already agreed for wage increases visibly below the current inflation rate, and I think this is also something which can be expected for Vienna Airport going forward.
Super, thanks so much. Unfortunately, we're out of time. I appreciate the insights that you've shared with us, Bernd. For those of you who are moving on to the next meeting, which will be Alma Semiconductor, I just put the link to the next meeting down in the chat box, so you can just click it and go to the next meeting. Thanks so much, everybody, and enjoy the remaining 10 presentations as well. Bernd, if you have a second, we'll just stay on the line.
Yeah,